Matt, Robinhood didn't have such a beautiful day the day after its earnings announcement. The market didn't really receive, I think, the report all that well. Going through the call, going through the release, I mean, I feel like all things considered, between the market's reaction and the actual numbers, so for me, this isn't a company I feel compelled to put on my radar. But I also feel like this earnings report could have gone far worse.
Oh, yeah. The numbers look great.
Yeah.
I mean, revenue more than doubled year over year. But what investors really need to know is it's not a stock trading app. Everyone thinks of Robinhood as this big trading app. They make the bulk of their money through options and crypto.
Yeah, I was going to say it's a crypto trading app, isn't it?
There are other platforms that do the stock trading part better, in my opinion. SoFi has a platform that does it better. The Cash App brokerage platform does stock trading better. No one does options trading quite as free and democratized as Robinhood does. And no one offers as much variety in crypto as Robinhood does through a traditional brokerage platform. Robinhood has 7 cryptocurrencies, including Dogecoin, which accounted for 34% of its crypto revenue this quarter, by the way.
I mean, that can't be good, right? I mean, that's like, listen, man, I mean, let's be real here, folks. That can't be good.
Right. So my point is, those are things that are the crypto. I don't want to call it a fad.
Yeah.
Because there are some long-term use cases for it. Dogecoin's a fad. I'll be plain and simple.
It feels like it is. It feels like it is.
But is it going to be at its current interest level forever? I don't know. It may be, it may be not. And that was 51% of Robinhood's transaction-based revenue this quarter was crypto trading. That's a lot to rely on crypto trading.
It is. It really is.
Options trading especially is kind of worrisome. It's not quite as big as crypto trading for Robinhood, but it's a lot bigger than equities trading. It made up $165 million out of $565 million of revenue.
Yeah.
And options traders, if you don't know what you're doing with options, you could probably back me up on this. If you don't know what you're doing with options, you're probably going to lose money.
I would agree. I mean, I think with options, it's something that just requires, it's far more nuanced. It requires more education. I think it's far more of an active style of investing, right? You need to stay on top of that strategy far more than you would if you're just a buy to hold investor taking that longer view.
Right. And that's kind of the point. So Robinhood's relying on their options traders to keep trading at these elevated volumes. But what happens when inexperienced option traders, buy too many call options and lose their money and then lose interest?
Well, I feel like we've seen the worst case scenario there, right? I mean, we've seen some stories that exhibit the worst of the worst case.
So, I mean, I would worry as a shareholder. I'm not a shareholder of Robinhood, but if I were, I would worry that they're so dependent on those two forms of revenue that make up almost, between the two of them, that's 90% of their transaction-based revenue.
Yeah.
They make a little bit of revenue from selling subscriptions. They have a premium, the Robinhood Gold platform, that accounts for a little bit of revenue. But 90% or close to it of their transaction-based commission revenue, in other words, not commissions, but they make a payment for order flow, things like that, comes from crypto and options. That would worry me. If it was say 50% stock trading revenue, great, that's sustainable. The crypto and options thing kind of scares me. I don't know about you.
Well, it does. I mean, for me, I don't know if it scares me as much as it just makes me really doubt the sustainability, right? I mean, I think that's the key. It's like, it's one thing to do something well. It's one thing to do it well for long stretches of time. And I think that's where I grow a little bit concerned. And I think one of the signs with Robinhood that makes me, I view it a little bit more glass half empty. So you look at assets under custody, right? And that was it was encouraging when you look at the actual number. Assets under custody reached $102 billion. I think that was up something like 205% from a year ago. And I mean, that on the surface, that sounds great. But now when you couple that with the actual number of cumulative funded accounts at 22.5 million accounts, all of a sudden now you see that there's this account average of around $4,500. Mm-hmm. And so that's telling us a couple of things, right? It's telling us, number one, that these are not really, on the average, they're not high value clients, right? I mean, $4,500, that's not a high value client, particularly when you look at something like a Schwab, that holds like $7.5 trillion under custody. But I would also imagine that of that 4,500 average, that $4,500 average, I'd bet you the median is far lower. Right. And so
Right.
you've got this sort of 1-2 punch of not the most valuable clients in the world. And they're not investing as much as they're speculating. That to me is scary.